The Treasurer Jim Chalmers says the worst of the inflation crisis is behind us. But according to the International Monetary Fund, Australia is on track to have the second worst inflation of all advanced economies next year. Joining me now is independent economist Saul Eslake. Saul, what's your read of this? Inflation will remain higher than other advanced economies. Does it matter where we are in the rankings?
I don't think it matters as much as the headlines this morning have suggested. First of all, the IMS forecasts that are being quoted here are for headline inflation, and we know that that's being influenced by government rebates for electricity bills in particular, and the IMF is assuming that there won't be any extension of those rebates when they expire in the June quarter of next year, whereas the reality, I think, bearing in mind there's going to be an election in May next year, is that almost certainly those rebates will be extended for at least an additional year. The second thing is that these forecasts, as I say, are for headline inflation. The Reserve Bank has said it's focused on underlying inflation. And while these IMF forecasts are actually a tad higher for 2025 than the Reserve Bank's own forecast of 3.7% over the year to the December quarter, the Reserve Bank is expecting the underlying inflation rate to be back just under the top of the 2 to 3% target and by 2025, December 2025, and that's what matters in terms of their willingness to cut interest rates. So that's the first point, is that these are about headline rather than underlying inflation, and the Reserve Bank is focused on the latter, not the former. The second thing is that the Reserve Bank has made a conscious choice, as Deputy Governor Andrew Houser spelt out again just this week, to go more slowly in bringing inflation down than its peers in the US, the UK, Canada and New Zealand, in order to preserve as much as they can of the gains that were made in reducing unemployment in 2021 and 2022. And you can argue whether that's the right choice or not to have made, but they made it. And it's worked in the sense that, yes, inflation is slower to come down than in some of these other countries, but unemployment hasn't risen by as much. And if the comparison is with New Zealand and Canada, nearly as much as it has in those. Australia's unemployment rate has risen 0.6 of a percentage point from its low in the middle of 2022 to 4.1%. In New Zealand, it's risen by 1.4 percentage points and would have risen by more, except that Kiwis come over here when their labour market is weak. And it's risen by 1.6 percentage points in Canada. So those central banks are cutting their interest rates because their economy is weak. Our central bank isn't cutting rates, having not raised them as much as its peers, because unemployment hasn't risen by much and the labour market is still incredibly strong.
So when you look at these IMF forecasts and the rankings as well, I mean, the rankings, as you just explained quite eloquently, don't matter as much. And you explained that the RBA is looking at underlying inflation. We talk about this term sticky, terrible term, but let's go with it anyway. But should we look at also the recent history? Our inflation wasn't as high as places like the US and the UK. It wasn't as acute. Yes, it's come down quicker, but ours didn't go as high. Is there something in that?
There's a bit in that, but I think the key point is that the Reserve Bank has made a different choice from its peers. And as I said, you can argue about whether it should have made the same choice as its peers, that is, put rates up by more in the hope that inflation would come down more quickly and therefore they wouldn't have to stay as high as in other countries for as long as they're now having to do at the lower rate at which the Reserve Bank's been comfortable leaving them since November last year. There are always trade-offs between economic policy objectives, such as inflation and unemployment, and the Reserve Bank has made a slightly different one from its peers in the four other countries that are closest to us. I mean, there's one other country you could mention in this context that is a bit like Australia, which is Norway. It is it's an energy exporter, a commodity exporter like we are. And Norway's central bank raised its cash rate to 4% a bit less than ours, and it has left it there, unlike almost every other central bank in Europe, not just the ECB, but the Bank of England and the central banks of Sweden and Switzerland. They've cut their interest rates. Norway hasn't. We've been a bit like them, and it's not. I don't think you can say that choice is wrong. It's different. It's had a different outcome. The Reserve Bank has chosen not to place as much of the burden of bringing inflation down on people losing their jobs. And you can see the logic and an equity argument for having made that choice.
Saul, thanks so much for your time this morning. Really appreciate it as always.
Thanks for having me, Laura.